What you don't see on your agenda for today is the first presentation, which I'm going to launch into in a minute. When we put the presentation together, I'll admit that we all foolishly thought we were going to be dealing with the same estate tax regime under a Clinton administration, and hadn't thought to reserve a significant portion of time today for talking about what we now know will be a Trump administration and Donald Trump's tax plan. So I'm going to spend just a few minutes by way of background to the upcoming presentations, giving you a little overview about what we know and what we still don't know about the Trump tax plan. As I'm sure many of you have heard and read, Donald Trump's tax proposal for individual income taxes includes lowering a lot of the individual income tax rates and compressing the brackets to reduce them to 3, repealing the alternative minimum tax, increasing standard deductions and capping itemized deductions, and taxing carried interest as ordinary income. In addition, his business income tax proposals also include reducing corporate tax rates, repealing the corporate AMT, allowing owners of flow-through entities to pay tax at the corporate rates, which is one of the more interesting ones to us, because it's not quite clear what flow-through entities would qualify, what this means. Certain kinds of trusts are actually flow-through entities, so that might be an interesting estate planning technique down the line. But we didn't get much by way of information behind these proposals, so this is kind of going to have to be a wait and see. Of most interest to us, at least today, is what Donald Trump has said and what he hasn't said so far about what he wants to do with the estate, gift, and generation skipping taxes. What he said is exactly what's on your screen. The Trump plan will repeal the death tax, but capital gains held until death and valued over $10 million will be subject to tax to exempt small businesses and family farms. To prevent abuse, contributions of appreciated assets into a private charity established by the decedent or the decedent's relatives will be disallowed. And I'm reading that to you verbatim because I don't know what it means. I don't know how entirely to explain it. And I don't mean that to be in any way disparaging, but we just don't know enough about what those sentences are intended to mean and what they might actually play out to mean. We don't have any idea at this point about what Donald Trump's intentions are with regard to the gift tax, with regard to the generation skipping tax. If estate tax is repealed, will it be an immediate repeal, or will it be some kind of phased-in repeal? Will the repeal be permanent, or will there be a sunset provision as there was when President Bush repealed the estate tax? Will there be a new tax regime in place of the estate tax? It seems to be that he's implying either some kind of a deemed sale at death capital gains tax on appreciated assets at death, like the Canadian system, or possibly some kind of carried over basis regime where assets are only taxed when they're sold by your beneficiaries. He's talking about a $10 million exemption. It's not clear if that's $10 million per estate, $10 million per married couple, $10 million worth of assets, $10 million worth of appreciation. Is the exemption just for family farms and small businesses, or is the exemption just designed to help family farms and small businesses, but applies to any kind of appreciated asset? We just don't know enough about it. What we do know is the Republicans have consistently put forward in the House similar repeal bills that really were more clear and more clearly just repeal without the imposition of a new tax regime in place of the estate tax. So we just don't know where this may end up coming out in any kind of compromise, or whether the income tax cuts that the president-elect is proposing are going to cost enough money that they can't afford to cut any other taxes. So by way of background, we continue to operate under the assumption that the current tax regime is the current tax regime until we're told differently. But from what we've learned, at least in the last decade, in watching how the tax laws have changed, the thing we have to be most mindful of is that the tax laws are going to continue to change. That repeal is not going to be permanent. Even if there's a repeal, you always have to plan for the tax coming back. That temporary doesn't necessarily mean temporary. That tax rates can go up and down. And we have to be mindful of that in all of our planning for our clients. So I think what you'll find over the course of the rest of the morning is a lot of our discussion is going to be talking about the various ways that, both for tax purposes and otherwise, we build as much flexibility into our plans as we possibly can to allow for the uncertainties of life, the uncertainties of the tax code, and for surprises like we got when we realized that we had to talk about a Trump tax proposal this morning.